BlackRock's CEO is publicly pushing for tokenization, the SEC just opened the floodgates, and SEI Network is sitting right in the middle of a $30 billion real-world asset revolution with institutional money pouring in. But here's the thing, most people are completely ignoring what's happening right under their noses. SEI just added $111 million in total value locked in 7 days. Securitize brought $4.5 billion in tokenized assets to the network, and Deutsche Börse is feeding 4 billion data points into the ecosystem. Yet the price is still hovering at 29 cents, so either the market is blind or we're sitting on one of the quietest accumulation phases of the cycle. Let's break it down. Hey, what's up everyone? Welcome back to the channel. If you're new here, I cover crypto market analysis, altcoin deep dives, and the kind of moves institutions don't want you to notice until it's too late. So do yourself a favor. Smash that like button, hit subscribe, and turn on notifications because this SEI situation is developing fast and you don't want to miss what comes next. Let's set the stage. SEI is trading at 0.29 right now, and it's been stuck in a sideways grind for weeks. Most traders see this and think, boring, next. But I see something completely different. This isn't dead money, this is a coil getting tighter by the day. Support is holding firm between $0.28 and $0.30, and every time bears try to push it lower, buyers step in and defend that zone like their lives depend on it. That tells me one thing. Smart money is accumulating while retail is sleeping. Now, why does SEI even matter? This isn't just another layer 1 trying to compete with Ethereum or Solana. SEI is positioning itself as the real-time global settlement layer for tokenized real-world assets. We're talking stocks, bonds, credit funds, traditional finance stuff that moves trillions of dollars. And guess what? The big players are already here. Securitize, the platform behind BlackRock's BUIDL fund, just went live on SEI. They're bringing over $4.5 billion in tokenized assets to the network. That's not a test run, that's a full-scale deployment. Then you've got Deutsche Börse pumping real-time market data, 4 billion data points across equities and bonds, directly onto SEI through Chainlink data link. This is institutional-grade infrastructure, not some DeFi experiment built in a basement. And here's the kicker. Larry Fink, BlackRock's CEO, has been beating the tokenization drum for years. He's on record saying traditional finance needs to tokenize stocks and bonds. Well, the SEC just gave tailwinds, institutional interest is spiking, and SEI is the chain where all this is happening. If that doesn't make you sit up and pay attention, I don't know what will. But here's where it gets interesting. Despite all this bullish infrastructure news, SEI is still sitting at under 30 cents. The market hasn't reacted yet. Why? Because most traders are looking at price action, not fundamentals. They see a coin stuck in a range and they move on. They're not connecting the dots between BlackRock's tokenization push, Securitize's deployment, and SEI's total value locked exploding by $111 million in just 7 days. That's either a massive opportunity or a massive red flag, and honestly, the next few sessions are going to tell us which one it is. According to a well-known trader named Tanaka, SEI is defending that $0.28 to $0.30 support zone like a fortress. The price action is forming higher lows along a rising trend line, which is textbook accumulation behavior. Bulls are building a base, but here's the catch. Moving averages are compressing. That's a technical sign that volatility is about to explode. The market is coiling up, and when that spring releases, we're either breaking out hard or flushing down. There's no middle ground here. Tanaka points out that a daily close above 0.35 is the technical trigger everyone's watching. That's the level that confirms the breakout. If SEI can punch through that resistance, the next targets are 0.475 and then 0.68 to $0.70. But if it drops below 0.27, the whole bullish setup gets invalidated, and we're back to square one. So right now, we're sitting on a knife's edge. Patience is key, but so is preparation. Now let's talk about what the charts are actually saying, because technical analysis doesn't lie. According to TradingView data, SEI is trading at $0.2918, up 0.86% in the last 24 hours. That might sound boring, but look closer. The price is hovering just below the Bollinger Basis line at $0.2966. This line acts as a pivot point for short-term trends. A sustained close above it flips the bias from neutral to bullish. We're talking about a few cents that could change the entire narrative. The Bollinger Bands are expanding, which means volatility is coming back into the market. That's exactly what you want to see before a major move. And here's the important part. The Chaikin money flow indicator is sitting at 0.04. That's positive. It means capital is flowing into SEI, not out of it. Accumulation is happening. It's mild right now, but it's real. When you combine that with the higher lows we've been seeing, the technical picture is starting to favor the bulls. Another analyst, Rose Premium Signals, is calling out a V recovery formation on the daily chart, backed by a descending broadening wedge setup. For those who don't speak chart, that's a bullish reversal pattern. Rose's midterm target is 0.67, with long-term projections stretching to 1.10 and even 1.50. Now, I'm not saying we're guaranteed to hit those levels, but the technical structure supports the possibility, and when you layer in the fundamental catalysts, BlackRock, Securitize, Deutsche Börse, the $111 million TVL increase, the odds start tilting heavily in favor of the bulls. Here's my take. SEI is building one of the strongest accumulation bases I've seen in months. The fact that it's holding support, despite broader market chop, tells me there's real conviction here. Institutions don't deploy billion-dollar infrastructure on chains they think will fail. They're positioning for the future of finance, and SEI is the rails they're building on. If retail wakes up to this before the breakout happens, we could see a violent move to the upside. But if you wait for confirmation, you'll be buying at $0.40 or $0.50, not $0.29. The risk is clear. If SEI breaks below 0.27, the setup is dead and you cut your losses. But if it holds and breaks 0.35, we're off to the races. Risk-reward is heavily skewed in favor of the bulls right now, and that's the kind of setup I like to take. You don't get many chances to buy institutional-grade narratives at retail prices. This might be one of them. Alright, that's where we're at with SEI. BlackRock is calling for tokenization, the SEC is opening doors, and SEI is quietly building the infrastructure that could power the next generation of capital markets. Whether this turns into a moonshot or a missed opportunity depends on what happens in the next few weeks, but one thing's for sure, this is not a coin you should be ignoring right now. If you found this breakdown helpful, go ahead and drop a like, subscribe if you haven't already, and check out my other videos where I'm covering more altcoin setups, market analysis, and the moves institutions are making while retail's not paying attention. I'll catch you in the next one. Stay sharp, stay patient, and don't sleep on the quiet movers. Just a quick reminder, crypto is high risk. Nothing I say is financial advice. Always do your own research, manage your risk, and never invest more than you can afford to lose. See you next time.